All right, welcome back, everyone. And today, my co-host once again is Julie. How are you, Julie?
Fine, Sweet. How you doing this morning?
Great, great, fine. Thank you so much. Anyway, so Julie is one of my members for my network, and she has been doing podcasts with me for several years now. And today, we're going to talk about Buffalo Niagara Falls investment opportunities.
Yay.
Yeah, something that you know a lot about. So
Hmm.
anyway, uh, in case you're watching this podcast for the first time, those of you out there, we have several thousand members within our real estate network. People are members from all over the country, and we have like six different markets that we're promoting,
Right.
turnkey cash flow markets in great growth areas in the country. Good cash flow with 25% down payment. We have property management, the whole
Mhm.
9 yards, easy to do from anywhere in the country. So anyway, today we're gonna talk about this market that is dear to Julie
Mhm.
because you
Mhm.
yourself several years ago at the onset of the pandemic housing boom, you have
Yes.
purchased approximately six rental properties,
Yes.
most of them with cash flow. I mean, most down payment, you use investment loan to leverage your portfolio, and also you
Right.
bought with your self-directed IRA. But
Hmm.
throughout the presentation, you can share little bit about your experience. But although we talked about it from quite often over the years when you
Hmm.
do your podcast with us. So today, I'm going to share the PowerPoint. Let's
Okay.
review what's going on in this in our turnkey investment
Hmm.
opportunity here in Buffalo Niagara Falls. And so basically, so again, most of my turnkey markets that I promote are located in the Sunbelt. New constructions, housing costs like 250K, rents for $1,850.
Right.
For turnkey new construction in Texas and Florida, in Alabama, and Oklahoma. And so of course, the reason why I don't promote the Midwest market too much, because a lot of reasons, I'm not going to go over it
Hmm.
today, but I'll go over a little bit of it throughout today's presentation. But nevertheless, turnkey, I mean, Buffalo turnkey is the market are very, very similar to other
Hmm.
Midwest markets, such as, typically older homes, high cash flows, and C class to B minus class neighborhoods, which is fine, you know.
Hmm.
So the only company I trust is Buffalo Turnkey. So
Right.
there's no need for me to expand my Midwest no, markets to anywhere else, because uh, I just felt that this is enough for our investment network to take advantage of. So
Right.
yeah, so with that in mind, so why Buffalo Niagara Falls? So again, Midwest properties, they're typically older C-class homes, low price
Hmm.
points. The,
Yes.
the typical pricing, so give or take, single family home rental property like
Hmm.
$70,000, and duplex we have here is 100K, give or take, a triplex 150K, and a fourplex at 200,000.
Hmm.
Yeah, you get less appreciation compared to the new construction growth markets that we promote in
Right.
Texas and Oklahoma and Florida, but stronger cash flow and very, very low entry point, which is
Hmm.
down payment wise, which is very enticing, right? So, and
Right.
yeah, and this is the typical property that we have. Yeah, of course, we have, like I said, we have single family home. Mostly 80% of our listings, off-market listings, are single family home, like 20% are duplex. And from time to time, we have triplex or fourplex for 200K, 250K available, but it's kind of rare. But the benchmark, I know on paper, I know this is sometimes the paper returns are not that realistic, but we try to be as realistic as possible. The rent to value ratio is greater than 1%, which is very rare these days. 1%,
Right.
1% rule, the 1% rule people know about, right? 1%
Right.
multiplied by the purchase price equals whatever gross rent, and that will automatically give you good cash flow. But
Yes.
given the skyrocketing of home prices in the past few years, it's very hard to meet the 1% rule.
Hmm.
But in Buffalo Niagara Falls, we have that. So, but that's not the only ratio you should use. Well,
Right.
the capitalization rate is almost, is 9%. Cash on cash return is 9%. And a total ROI at the end of the first year is 22%. If you factor in the 3% annual appreciation and 8% vacancy rate
Hmm.
and maintenance factor 10%, and with the tax benefit, with the equity appreciation, with the annual net cash flow, all equals to 20% because
Hmm.
your total uh, gross equity income at the end of the first year is 4,700 divided by your total down payment, well,
Hmm.
22,000 equals 22% at the end of the first year
Right.
total ROI. So the number looks good, but it's more than numbers, okay? We try to be as realistic as possible. So giving this kind of cash flow, of course, at only 20% down payment, even with an elevated
Hmm.
mortgage rate of 7.5%, whatever, you can still achieve positive cash flow. So that's the key, right? Positive cash flow. So with that said, uh, Julie, since you bought quite a few of these
Hmm.
rentals 3, 4, 5 years ago, quickly,
Right.
quickly, can you?
Yeah, that's very, in fact, that property is very typical of the type of properties that we purchase. And I think people think, oh, when they watch videos like this, oh, well, that must be the only one. No, that's not. I mean, we were able to pick from several, and our average property fell exactly right in with what you were talking about, that, 70,000 or so price point for a single family residence. We were able to get a duplex for just a little bit more than that. And, um, the reason that you said with the low property, entry into the property and the high cash flow, that's the exact reason that we purchased in that upstate New York area, because that's exactly what we were looking for, looking to supplement our retirement as we age. And that was just the perfect trifecta for us.
Yeah, yeah, Julie, it's all about someone's goals and objectives. So,
Yes.
so everyone have a different buy box, right? And
Yes.
since you are somewhat closer to retirement, you are a baby boomer such as myself as well.
Right.
You want higher cash flow.
Yes. Yes.
Appreciation is secondary because your timeline for your retirement is maybe 5 years away from now. So
Correct.
you want income. So
Hmm.
that's your buy box. So Buffalo Niagara Falls is fit within your buy box. That's why
Yes.
you're able to scale your Buffalo Niagara Falls portfolio to the extent that you did.
Absolutely.
Now,
Absolutely.
I mean, but normally the appreciation is not that high, which is fine long term
Right.
on a historical basis. But I mean, I know a lot of people's houses appreciate a lot during the pandemic housing boom back in
Hmm.
2020 to 2022.
Right.
So Buffalo Niagara Falls are no different than any other market
Hmm.
back in during the pandemic. You were
Hmm.
able to achieve quite a bit of appreciation on your.
We really did. Yeah, I was really surprised at how the values were going up, So, and then I think the thing too that really helped us, two of the properties we put in our retirement accounts. So every month we're building our retirement effortlessly,
Yep.
effortlessly. So that's really exciting to see that. And my husband is still working, so we don't need to take out the cash right now,
Right.
So it's great. I mean, it's a win-win-win all the way around.
And of course your rent has increased too. So
Yes, it has.
go figure, right? So
Right.
higher cash flow now than a few years ago, more appreciation, equity growth. Oh, tell me, people are dying to know. You may not have an estimation, but on your six property portfolio, on an annual basis, can you kind of estimate what is your maintenance? People are wondering, oh, these properties are like 50 to 100 years old.
Right.
Turnkey, they're rehab nicely, but what is the estimation annual maintenance and upkeep and vacancy on your portfolio for the past 4, 5, 6 years?
I would say the vacancy, just start with that one, maybe about 5%. But again, we bought six of them. So we may have one out, but then the other ones are producing. So it's not, it's kind of hard to average it. But I would say maybe a 5% vacancy rate.
That's
A
good.
couple of
That's
them
good.
we've had long-term tenants and they haven't moved, which has been great. That's been a blessing. And then as far as the maintenance, we've had a couple of repairs where, people left and we had to, do some things, but not a lot. Not a lot in the grand scheme of things. Gosh, I don't know, maybe 5%, 8%, maybe repairs, something like that. Yeah, it's kind of hard to say. So,
Fair enough.
but yeah.
Fair
Hmm.
enough. Nothing. There's no major
Mm-mm.
capital expenditure
No.
cost.
No, and these are older homes too, so they've been around, so there obviously there are going to be things that need to be repaired, but it really hasn't had a significant impact on our overall portfolio.
Yeah, of course, that's your expectation. You have cash reserve to
Right.
address any potential
Correct. Yeah.
air conditioning or the boiler breaks down or the roof
Right.
major repairs. You factor that into your portfolio.
Correct.
So you
Absolutely. Absolutely.
have
That's like the
to,
cost of doing business.
yeah,
This is a business.
you you going in, you knew what to expect. You set
Correct.
some realistic expectation for yourself. You're buying a high cash flow portfolio in Buffalo Niagara Falls, similar to other Midwest markets,
Right.
which a lot of people still buy. A lot of
Yeah.
people, there are more investors. They buy these lower cost, entry
Hmm.
level Midwest properties, similar to Buffalo Niagara Falls,
Hmm.
than any other markets in the country
It makes sense.
because they're easy. The low down payment,
Yes.
easy to finance, good
Right.
cash flow, and you can scale. We'll talk more about that. So
Hmm.
appreciate your transparency.
Hmm.
Appreciate your you lay it out there. You didn't leave anything out. I mean you
Right.
tell the audience out there
Absolutely.
that this is the reality of your portfolio.
Hmm.
It's not
Hmm.
as bad as some people paint a picture.
No, it's not at all.
Good, good.
And again, this is, we're looking at this long term. We don't ever expect to sell them. I mean, things can happen, but we don't ever expect to sell them. It's just like a retirement account that just pays and pays and pays forever.
Yeah, it'll supplement you and your husband retirement. When and if your retirement, your cash flow is not going to replace his W-2 income.
Right.
I
Of
mean,
course not. Hmm.
that's unrealistic, okay?
Right. Right.
Unless you buy 50 rentals, maybe, right?
Right. Yes, exactly. Exactly.
But it meets your goal, right? I mean,
Hmm.
when you and Mark retires, whenever that can be next few years, you have
Right.
Social Security income. Mark will have his pension from his job.
Correct.
And then
Hmm.
you have this, yeah, and you supplement with this
Right.
rental cash flow from your six property or more rental portfolio.
Absolutely.
So
Absolutely.
that'll meet your goal, right?
You're absolutely right. Yeah. I mean, multiple streams of income, and then he gets Social Security, I get Social Security, So it all adds up, so that we can maintain our lifestyle. But the house was a big part of it. It's something that we've always wanted to do. And this Buffalo Niagara Falls market allowed us, based on what we had to work with, which wasn't a whole lot of money, but we were able to really
Right.
maximize by leveraging, four of those properties.
Exactly, exactly. So let's go on. Good point.
Hmm.
So anybody out there, now that you realize the price point of Buffalo Niagara Falls, and and I'm saying this, if your W-2 salary right now is about 50,000, only 50,000, which is around
Hmm.
$4,000 per month
Right. Right.
in your W-2 salary, you can qualify to buy this kind of rentals, the single family home, the
Hmm.
duplex, the triplex, and the fourplex from 70K to 250K. You
Hmm.
realize that, right?
Absolutely. Hmm.
Yes, you can. You don't need 100 grand. You don't need a six-figure W-2 salary
No.
qualify to buy these rentals with
Hmm.
financing. Just
Yeah.
all he needs a minimal of 50K. Who doesn't have
Right.
a minimal of $50,000 of
That's
W-2
right.
salary?
That's right.
And
Hmm.
as long the big catch is you gotta have the down payment, you gotta have the cash,
Right.
right?
Right. 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 Yes.
That's the biggest challenge, right? 20 to 25% down payment. You
Exactly.
to finance these kind of properties. look, you got to come up with a down payment somehow, some way, right?
Yeah.
Otherwise, and furthermore, one thing that people may not realize, not only that, your debt to income ratio is should be, there's a typo. It should be
Oh, less than
less than uh, I, I,
50%.
less than 50%. So
Hmm.
if your gross income is $4,000 per month, W-2 salary, your
Hmm.
total of your debts, in consumer debt or car loan or mortgages, whatever, should not be more than $2,000. 50,
Right.
50% ratio, right?
That's
So,
correct.
yeah, I'm not going to talk about this kind of technical terms too much on this presentation. We have to
Hmm.
move on, but it behooves all of you to work with an investment loan agent to do some loan pre-qualification. So they can
Hmm.
go over, they can get loan approval, they can run the credit on you, FICO score 720 or above, hopefully.
Right.
DTI, debt to income ratio of less than 50%. You have to source your down payment and all that. You have to
Hmm.
have W-2 income. Ideally, ideally for the past 2 years, you have a good stabilized income. But then
Right.
again, I'm not going to talk about there's another loan program
Hmm.
which I will talk. It's a DSCR, debt service credit ratio, which is a
Hmm.
old doc loan. Oh, the property will qualify for itself. But I don't have time to talk about the DSCR loan, which is very, very
Okay.
popular for investors these days. It's a no
Okay.
doc loan. Okay, you just, as long as you have the down payment, you have a good credit score, and
Hmm.
the property itself needs to qualify. The property you buy
Right.
needs to have a positive cash flow projection,
Okay.
which apply to Buffalo Niagara Falls.
Absolutely. 100%.
So remember DSCR, debt service credit ratio, investment loan, no
Hmm.
doc loan, no need to submit your W-2, no need to submit your
Wow.
tax return, nothing.
Hmm.
If you do not qualify with the conventional Fannie Mae lending
Right.
guidelines. So
Hmm.
as long as you have the down payment, as long as the property itself, the DSCR lender will qualify the property, make sure it cash flow.
Right. Right.
And the,
Correct.
and the interest rate of shockingly are very, very similar to a
Hmm.
conventional investment loan under the Fannie Mae lending guidelines.
Right.
I,
Very
I,
good.
yeah, I would
Wow, that's good. You could do a whole class on that by itself.
and I will. I have, my
Yeah.
investment loan agent, Chaley Ridge, we're gonna do a future
Hmm.
webinar on the amazing possibility of using a no doc DSCR lending.
Great. That's
So,
really good. That's excellent.
so yeah, people have a lot of loan options available.
Hmm.
A lot of people are not aware of it. So currently, under the conventional lending standards, our several investment lenders, including Richard Advani, uh,
Hmm.
which is for rate mortgage, and also Chaley Ridge from uh, Ridge Lending Group, they can
Hmm.
they can finance they can finance this kind of low property deals as low as
Hmm.
6,000. They are willing to finance
Mm.
a 20 to 25% down payment, which is contrary nationwide. Very few lenders,
Hmm.
if any, are willing to finance these low cost.
Right.
Is that amazing?
Hmm.
So, Julie, consequently, many of our network investors, including yourself, are
Hmm.
able to scale their Buffalo portfolio fairly quickly in a matter of
Hmm.
a few years. And
Yeah.
you did it with 6 rentals,
Hmm.
right away back in 20,
Yeah. I think
2021.
we're from beginning to end. I think it took us about 18 months to get all six properties.
Yep,
Because I remember the last two, we ran the escrow simultaneously. Yeah, so that worked out really good.
excellent. Yep.
Hmm.
Yeah, so our turnkey provider, Buffalo Turnkey, they have repeat investor buyers from for the past 30 years from Canada across Niagara Falls. Of course,
Hmm.
Niagara Falls
Oh,
is
right. Yeah, it's right there.
Canada. So they have, consistent buyers, repeat buyers from Canada across the US, including California and other high cost areas. And they have investors from overseas. They'll buy with all cash because these properties are so cheap. They have buyers from Israel, the Middle East, the UK, and Australia. So Buffalo Turnkey
Wow.
Yeah, but for turnkey, been around, as you can see,
Hmm.
more than 30 years in the Buffalo Niagara Falls. That,
Right.
Julie, is a turnkey advantage. And
Yes.
what they do, but for turnkey, they they you know, so of course, my network partnered with them for a number of
Hmm.
years now. Quite a few of my buyers, just such as yourself, have
Right.
purchased multiple properties from Buffalo Turnkey over the years.
Hmm.
They they are a one-stop shop. They have
Yes.
great property management. They have rehab team. They do all the tenant screening on our behalf from out-of-state investors. They have
Hmm.
ongoing maintenance and repairs, everything handled for out-of-state investors. Therefore, not only you spoke about Julie, you spoke about you spend less than 1 hour per month
Yes.
to look over your six property portfolio. Uh,
Correct.
Even my other investors have similar results. Okay,
Hmm.
several of our buyers have purchased, 5, 10, 15 turnkey properties in this market, and just
Hmm.
like you, they only spend 1 hour per month, if at all,
Right. Right.
so-called managing their property.
Right. Yeah. I mean, that's a real number too. And I think because we are working with the same team, and I think I want to echo what you said about it's a literal one-stop shop, because we're able to buy the property, they do any repairs, they do the property management, and so it's very seamless. So which makes my job easy. So when the rent receipts come in, I literally spend less than an hour logging the information in, and that's it. So I don't even have to cash checks because it's all done through, the wires.
Right.
Direct deposit. So I mean,
Yeah, yeah.
it makes it seamless. Yeah.
Yeah, you have an online property management portal, right?
Right.
You can log
Right.
in at any moment, at any time to see all the activities on all your
Correct.
properties, all
Correct.
at your fingertips with the
Mm-hmm. Mm-hmm.
power of technology and all
Oh
that.
yeah.
So it's easy, so easy. It's like, look, buying turnkey properties out of state, not just Buffalo Niagara Falls, in my other markets as well,
Correct.
Julie, it's just like it's almost passive,
It
right?
really is.
It's just like buying mutual funds and stocks and bonds,
Good
or
analogy.
syndications, or do whatever. So the misconception, there's still a lot of potential investors out there. They
Hmm.
think, oh, buying rental property, single family home, duplex, triplex requires a lot of work. You have to do it full time. You have to do the rehab. You have to self manage. You have to do, do, get down and dirty, and you have to
Right.
pre-screen the tenant, evict the tenant, and answer your phone call at the middle of the night,
Yeah.
whatever. None of that. None of that
None of
crap.
that. None of that. I don't think I could do it. That was six properties because that sounds like a full-time job, So it's worth it for me to pay someone else, the management, property management, to do
Yeah.
that. So I don't have to, so I can sleep at night.
Yeah, 8 to 10% property management fee from the rent
Hmm.
you collect.
Yeah,
That's no big deal. I mean,
it's no big deal.
yeah,
Again, it's the cost of doing business. Yeah,
that's right. Yeah,
no
exactly.
big
Yeah.
deal.
Anyway, so let's go on. Yeah. So
Hmm.
again, just to go over the numbers, the financial performance of Buffett Keys. Look, these are the numbers are really good numbers. Cash to cash return 9%, rental value ratio at least 1% still.
Hmm.
Vacancy, yeah, they are, but very, very manageable. Like you said, 5 to 7% vacancy on a giving uh, in any given moment. But the key is, look, uh, per property you buy, if you have a minimum of 20 grand,
Hmm.
right, you're able to finance this kind of property. So
Yes.
not that hard.
No, it's not. It's not. And then again, you have to keep in mind the tenant is paying the mortgage. So
The tenant, not only the tenant is paying your mortgage, the tenant is paying everything for you. They
true.
are making you wealthy. The tenants paying the gross rent you collect on any given month.
Hmm.
Tenants pay with their rent will pay your mortgage, pay
Right.
your taxes, pay your
Right.
insurance, pay
That's
your
it.
property management fee, pay you 5 to 7% maintenance, five to
Right.
7% vacancy. What
Hmm. That's a very good point. Yes.
at the end of the month, at the end of the month, you will still receive positive cash flow into your bank account.
Correct. Absolutely. 100%. Hmm.
That is what's all about.
It's a
And
win-win.
no other real estate asset class, historically speaking, can come even close
Hmm.
to having a good income property that will give you all these multiple streams of income.
Absolutely. You're absolutely right, Seaway.
And as you know, rent will go up, cash flow will go up over time. So it's a long-term
Right.
investment. We all know that equity
Right.
will grow up over time. There's some
Hmm.
short-term fluctuation with the appreciation here and there. We all get that.
Correct.
Long-term, when you talk about 10-year investment cycle,
Hmm.
it will always goes up in value.
Absolutely. Yeah. Yeah. I don't think anybody living in the United States can deny that.
You cannot deny that. That's a
Hmm.
fact.
Hmm.
Our investors in Buffalo Niagara Falls, I would say 50% of them, such as you, buy with financing, 20 to
Hmm.
25% down payment. When
Right.
you leverage your loan to buy a property, your
Hmm.
returns are much higher
Yes.
as opposed to buy with all cash. We all know that, right?
Correct.
Having
Hmm.
said that, 25% of the investors, when they buy with this Buffalo turnkey, they buy with all cash. Why?
Right.
Because they have the money.
Yes. Makes sense.
They have the money not only when they buy all cash, they're not buying one property. Investors from all over the country buy in this our turnkey provider.
Right.
Over the years, they buy two or three, four at a time because
Yes.
they know with all cash, there's no debt associated with it. The the return they receive
Yes.
from the
Hmm.
rent minus the expenses, it
Right.
gives them a good return they cannot get
Hmm.
anywhere else.
Right.
Plus, no, is they don't have the headache of tenants and toilets.
Right. Exactly. Exactly.
It's almost passive.
Hmm. It really is. It really is. Yeah. I mean, it just makes sense. And like you said, the values in this particular markets are so reasonable. I won't even say cheap, but I'll say they're reasonable.
Yeah,
And yeah, even if you have to finance it, you're still going to do well, if you don't have
yeah,
all cash. But it's I think the main thing is you got to get started. If
absolutely.
you're going to do it, you got
Yeah,
to get
you gotta
started.
get in. All the newbies out there have been paralyzed by fear and
Right.
everything else in past 2 years. You gotta get in. You
Hmm.
gotta take risk, a low, very freaking low risk. Okay, I mean, 20
Right.
grand to finance a property. I mean, that's such a no-brainer. If you don't have
That'd
20
be
grand, I don't know what you have done with your money. Okay,
good
you
point.
really, you really need to look at your mirror. Why can you not even save 20 grand to buy your first rental property on a farm
Right.
to
Right.
finance your purchase? It's just a lot of people, even savvy investors, they are still not aware you can buy a rental property, hard assets with your self-directed IRA, which
Hmm.
you
Absolutely.
personally have done.
Yes.
Now,
That's a real thing.
Julie, if you're able to buy a realistic hard asset with your self-directed individual retirement account,
Hmm.
and at the time you bought it back in 2020, you were a newbie.
Right.
How come there are so few investors, newbies and so-called savvy investors
Hmm.
still out there in the country, still have no clue that you can buy investment property inside your IRA? Why so people are so uninformed about this strategy?
And it's so interesting. I didn't know about it, which is very interesting because, my background, I used to work in investments and we did a lot of retirements. I do remember the self-directed IRA class, but I just must have passed out on it because when you brought it to me again, I'm just like, that sounds familiar, but I really had no idea the advantages of having a self-directed IRA because it's not just houses you can put in there. You can put all kinds of things,
Right,
artwork, jewelry, gold, silver, whatever.
right.
So there's a lot of options out there. And then, I think that the big struggle for me is, okay, I'm trading my cash for a house. But then when I look at it, it's like, okay, the value of the house is going to increase. the income is going to come in forever. So I look at it again from having an investment background as a stockbroker. I look at it like it's an annuity that will pay you forever and ever and ever and ever, but different from an annuity because annuity, once you annuitize it, it's a flat rate forever.
Yeah, it's fixed. Yeah, it's pretty
It's
much fixed.
fixed. It's
Yeah.
fixed. But if y'all don't know what annuitizing is, Google it. But with the real estate property, you're getting the value of the property increase, plus you're getting increases on your rent every year to keep up with your cost of living. So that's very different. So when I looked at it from that perspective, I thought this totally makes sense.
Julie, you and I talk about this quite often. We talk about IRAs, self-directed IRAs, on many other
Right.
podcasts, but I believe this is the first time you use this particular example, and
Hmm.
using the annuity
Hmm.
comparison is a
Hmm.
very thought out process, very rare that you present it the way that you did.
Right.
It, it's another way to give you some apple to apple comparison that
Right.
buying income property, if you know what to buy,
Hmm.
like you do,
Right.
the returns on the IRA inside income property is
Right.
higher
Yes.
return on a Wall Street stock market,
Absolutely.
traditional mutual funds, stocks,
Hmm. Hmm.
bonds inside the IRA to the Wall Street.
Right. Right.
No brainer.
It just made sense. I know it was kind of a no-brainer. It just made sense when you do the math. And it's simple math. It's not the new math. It's just basic, simple
Exactly.
math.
Simple sixth grade
Right.
math.
Yes. Hmm. Hmm. That's it. Yeah.
All you do is, you do the paperwork, transfer your mutual funds IRA portfolio on
Hmm.
tax-free transfer into a real estate portfolio inside
Correct.
income hard asset.
Absolutely.
It's paperwork shuffle. It's
Exactly.
that simple.
It really is that simple.
It's
Yeah.
get online, use our self-directed IRA custodian,
Yes.
use my team, use the whole team approach that we do anyway
Hmm.
in our network, and just do the paperwork shuffle. It's
Right.
freaking simple.
Exactly. No, it's true. It's true. And just do the research. I mean, with so much information out there that you can just Google it and the AI tells you what it is, there's
Oh,
really no reason to not be informed about
oh,
a strategy like this.
Julie,
Right.
GPT AI is a game changer. You can
Yes.
do any kind of research,
Hmm.
anything,
Yes.
especially when you research anything investment wise, uh, the property that we present, the numbers that I show on all my podcasts from all the real estate markets that we do on a weekly
Right.
basis. I mean, trust my network and verify. How you verify?
Hmm.
Use ChatGPT
There
mainly.
you go.
Oh my goodness. Oh, look, we're not going to go over this spreadsheet. This is a
Hmm.
monthly
Oh,
spreadsheet
nice.
from our Buffalo turnkey provider.
Hmm.
And I know the numbers are I'm not asking you, the viewers, to widen the screen. At the end of the day, okay, when I get this off-market listing
Right.
from Buffalo turnkey provider, this is what I get. This spreadsheet,
Hmm.
you get a copy of this spreadsheet when I send out the email newsletter into my database, right?
Right. Correct. Hmm. That's
On
correct.
changing weekly listings, monthly listings that are sent to my database, and just
Right.
digest these numbers. Okay, so in
Right.
terms of Buffalo, you know what? This spreadsheet, Julie, 3, 4, 5 years ago, used to be twice the the the,
Hmm.
the listing.
You're right. I remember. I
Yeah,
remember. It was
yeah.
long.
3, 4, 5, 6 years ago, Buffalo Turnkey were able to provide many great deals. What
Hmm.
they are 3 pages long.
Yes.
Amazing deals back then. The returns are very high. That was during the COVID, pandemic housing boom. But now
Hmm.
the reality has set in.
Right.
It is much harder to find the deals anywhere in the country, let alone
Hmm.
Buffalo Turnkey or any of my other
Right.
markets.
Hmm.
Okay. Uh, we're not going to go over why, right? People know
Right.
why, right?
Yes.
This current housing market environment is very challenging indeed, right?
Yes.
You,
Yes.
you got to find the right market. You got to find the right team.
Hmm.
The question is, You have to find the right buy box. Not everybody want to do, this kind of deals, but
Hmm.
a lot of people would if they know where to find them, if they can find a team they can trust.
Right.
So
Hmm. And I think you
now,
mentioned something earlier. You said these are off-market listings. So your audience needs to understand this is not something you're going to go into MLS or on realtor.com or whoever and find these properties because these are exclusive to investors. And really by being involved in a network like yours is the only way that I would be able to find out about these properties.
yeah, this spreadsheet, oh, Caleb Kanazi, our
Yes.
sales consultant for Buffalo Turnkey,
Hmm.
uh, I spoke to him recently. He said the deals are harder to find. There are
Hmm.
more competition.
Hmm.
There are more savvy investors are entering the Buffalo Niagara Falls market.
Right.
One of the reason why is, do you know Zillow? They have listed Buffalo, New York, as one of the top
Hmm.
housing markets in a country, two
Yes.
years in a row in
Yes.
2023 and 2024.
Hmm.
So the mainstream media are learning more about Buffalo Niagara Falls. So
Right.
more investors are entering this upstate New York market,
Hmm.
and there are more wholesalers out there. They're trying to find the deals in the market. So
Right.
they're competing against our own turnkey provider, Buffalo Turnkey. They've been doing it for 30
Right.
years.
Right.
And but
Absolutely.
when I spoke with Caleb Kanazi a
Hmm.
few days ago, he said, "See, Wayne, right now good deals hard to find because
I bet.
there's so much competition.
That's amazing.
People are entering the Buffalo Niagara Falls market, and Buffalo Turnkey of uh, they're getting less deals. And this
Hmm.
spreadsheet which I received a few days ago, is a reflection of the limited opportunities out there.
Hmm.
So moving forward, Julie, let me forewarn everybody.
Right.
Uh, the returns is not going to be as high in Buffalo Turnkey, in Buffalo Niagara Falls as in back in the pandemic housing.
Hmm. Hmm.
Unrealistic, right?
Right.
It's
Right.
it's a different market condition these days, but moving forward,
Hmm.
especially when the mortgage rates come down to 6% or below in the next few months, maybe, who knows, right?
Right. Right.
There will be even more competition.
Hmm.
Not only Buffalo Niagara Falls, but
Hmm.
all the good markets that I'm promoting
Right.
in
And see, that
Texas.
should signal to your audience that that's a clue, that's a clue.
That's a huge clue. Still find the deals within our off-market listings,
Right.
okay? And work with our
Hmm.
team in Buffalo Niagara Falls and work with Kayla Kanazi, because I tell you what, when the mortgage rates come down to 6% or lower,
Hmm. Hmm.
5.99%, guess what?
Right.
Guess what's happening? What do you think is going to happen to the housing market when mortgage rates come down?
Oh, it's going to explode. People will be coming out of the woodwork to buy, but then of course now you're working kind of against yourself because now there's so much competition. There'll be multiple bid offers, and it's like it's investing in the market really or anything. I was listening to a guy yesterday talk about even investing in the stock market. It's a contrarian mindset. You
Yes.
know, you don't get on. I mean, you don't buy when the market is high, like even from a stock perspective. You don't buy when the market is high because eventually it's going to come down. You buy when it's low and ride the wave up. But see, most people want to get in when it's already up, and
Right.
now with the real estate market, you don't have the advantages. You're not going to be able to create the cash flow because you're going to have to pay more, and you're going to be bidding against other people, and yeah.
That's right.
So you
But
should be getting in now.
you know what, Julie? You learned so much in your real estate investing career, and in mere 5 to 6 years,
Yeah,
you have become so savvy. The thoughts coming from you is just resonate. It's just so
thank you.
powerful, Julie. So
Yeah, well, I get really excited, and I just want to share with other people. I just wish everybody would take advantage of it. And the reality is, most people can with some of the price points. If you're looking at that spreadsheet there, everybody can. This is like I mean, what we pay on our mortgage is the payment and the interest. It's less than what I pay on my cell phone bill,
yeah, exactly.
and I have a property.
Yeah, Julie, this spreadsheet we get from the Buffalo Turnkey on a monthly basis. Look, I mean, in Buffalo, half of these listings are for owner-occupied buyers. They're not for investors. Okay,
Okay, right.
just tell you right now. So, and a good portion of this all has been reserved by other investors.
Mm-hmm.
There's one fourplex, one duplex, several duplexes. The
Mm-hmm.
good ones, the one that shows the high return projection, they
Right.
already been reserved.
They're already reserved. Right.
Just
Of
go to show
course.
you, yeah, of course, because savvy investors know about this kind of deals. This
And you don't think about it, you just do it. I mean, once you've done it and you understand what to look for, it makes the decision easy.
yeah, and of course, Niagara Falls, the prices are a little bit cheaper than Buffalo, but the
Hmm.
returns are higher. I mean, a little
Yes.
bit lower quality in terms of the neighborhood,
Right.
but some of these properties are in the various stages of rehab. Okay,
Hmm.
Uh,
Hmm.
and then when the rehab is done, then the portfolio turnkey will place a tenant in there and then sell
Right.
to our retail investors from out of state. So
Right.
a lot of some of these home are like it's hard to see like 70K, some are
Hmm.
$1,000, some duplex 150,000. So
Good
this,
deal.
yeah, I mean, yeah. So our savvy investors, you know, they come to me, I pre-screen them, make sure they
Right.
qualify and all that. Then I put them in touch with Caleb Kanazi. Then they
Yes.
work with Caleb Kanazi to find the deals, reserve the
Hmm.
property with a $1,000 deposit,
Hmm.
and then go through the loan process, whatever, or all cash, or with a self-directed RA. That's even better.
Right.
And then once the property is ready, uh, rehab is done, and then the loan is done, then you go through an inspection report. And the
Hmm.
inspection report, you can always find something, right? Some
Right.
minor issues because, you know, these properties are older. So
Yes.
that the inspection report itself takes, a week, whatever, or longer. By the
Hmm.
way, lending is kind of difficult these days lately.
Yeah.
So
Yeah.
a couple of my buyers right now, they are under escrow on a loan
Hmm.
in an
Hmm.
house. It has taken them 2.5 months to close escrow on a loan.
That's long.
Even 3 months
Wow.
because there are delays. The lending requirements are stricter. You know,
Okay.
when you buy, the lender have to go through the appraisal, make sure the property appraised as per the list price. But
Right.
and and then this kind of older properties, you must be a good quality older properties for the lenders to willing to finance these kind of properties. If not,
Right.
I just want to be transparent, Julie.
Yeah.
My lender and Caleb Kanazi, my sales consultant, they've been telling
Hmm.
me is not only is harder to find the deals, even within a
Right.
turnkey model, the Buffalo turnkey, but it's
Right.
harder to get a loan. It's the loan restrictions. You gotta get your ducks in order. You gotta be patient. You gotta go through the inspection. When the inspection comes out, uh, uh, the buyer more often than not will request some more improvement on uh, various aspects.
Interesting. That
Because
is different. Yeah.
when you bought your properties, you went through inspection, you used the inspection report. Tell me some
Hmm.
challenges that you had to go
Well,
through.
you know what? That's interesting. We did not have any problems with our lenders requiring any additional because I mean they were turnkey, so they were already fixed up. They had already done whatever minor repairs are needed, to be done. And several of our properties appraised over what we were purchasing it for. So
Mhm.
we had absolutely no problem with our loan. So it's kind of interesting to hear you say that they're getting more, they're scrutinizing the
Yeah,
loan process more so and really checking the appraisals and stuff. So I mean, we just got in at a really good time.
yeah,
But yeah, we had no problems with our appraisals.
good. So, Julie, as we conclude, I know we spent almost 45 minutes.
Oh my goodness. Time
So,
flies when you're having fun.
yeah, exactly. So the recap is, but for Niagara Falls, like I said, Julie, I don't promote Midwest market at all except Buffalo Niagara Falls because I feel comfortable. I trust my
Mhm.
team.
Right.
30-year, 30-year track record. My Buffalo Turnkey, they own a family business. They are the best
Yes,
in the
they are
local.
the best.
They know where to buy. They know the neighborhood. They know the
Mhm.
rent. They know the type of renter demographics. They have
Hmm.
great property management. So is it perfect investment? No, nothing is perfect. So going in, when you buy Nippon for turnkey, you know what to expect.
Correct.
Uh, don't be surprised. I will warn you, okay? I will warn any new investor that want to buy Nippon for turnkey. There's pros and cons. It's a old
Hmm.
properties.
Right.
It's a C plus class neighborhood, which is fine. Blue collar working class neighborhood is fine. The
Right.
renters are very, very, very good. And because there's a shortage of rental properties in Buffalo Niagara Falls, and always
Hmm.
has been.
Right.
If you
Right.
know the expectation, I mean, but not only that, Julie, what I found sometimes the investor, even though it's a turnkey situation,
Hmm.
some of our other investors, I want to be transparent, they can't deal with the some of the maintenance issues, a little bit of vacancy. They get overwhelmed,
Hmm.
and
Right.
and they exit. They sell the property prematurely.
Mm, okay.
To me, that's a mistake because
Right.
your mindset when you buy in the Midwest market, is that you need to know what to expect. Maintenance will occur, vacancy will occur.
Hmm.
Still, at the end of the day, your return is still high. It still makes
Right.
sense. You know,
Right.
But
Hmm.
people need to know that they have to have a mindset to understand. They need to have a cash reserve. They need to have a safety net to factor in any capital expenditures and vacancy and all that stuff. So,
Correct.
so don't get all freaked out when something
Right.
happens with your property. So, you once
And
again,
it's a cost of doing business, and you do get it back. I was very happy with my taxes this year. So,
yeah.
it's still a win-win-win. Like I say, even with the minor repairs or whatever that we've had to do, it's still a win-win-win.
Oh, absolutely, I agree. I agree. But just set the expectation. I will set it for you when
Right. That's good.
people when come to see me to do a pre-screening on this market. I will give you all the transparency you need, all the set the expectation because I don't
Hmm.
want any surprises, and I want
Right.
investors such as yourself. When you buy in the Midwest type of markets, you gotta have you gotta have a proper mindset. You gotta have a positive mindset.
Absolutely.
Don't get freaked out about little things, or don't get too emotional. You're running a business. I mean, yeah,
Right.
you're running a real estate business, although you spend
Hmm.
1 hour per month,
Right.
still
Yeah.
you
Hmm.
don't get
Hmm.
too emotional. It's all about the numbers, it's all about economics,
It's
and
all about the numbers.
we have a team to help you all these years. It's all turnkey.
Hmm.
I mean, what more? I mean, it's a trusted team that's been around for a long time, Buffalo Turnkey. So what more can you ask for, right?
Right. Yeah. Yeah. It's true. Yeah. If you keep the emotion out, and again, I compare it to like the investment market, do you get all emotional if, your stock goes up or down? Probably not, because, you probably research it and you understand things happen that affect it. So it's kind of the same thing. You don't look at it every day. You don't watch it every day. So I think you have to approach this housing market the same way.
Exactly. Very good, very good, Julie. So that concludes our presentation. You have a one quick last minute recap or anything else?
Yeah, I mean, just call and get the information. I think that people are hearing the information. They've heard a lot from you. They should call and get the information because now is a really good time to take advantage of some of these opportunities.
Absolutely. Absolutely.
Hmm.
Thank you so much, Julie, for your time.
Thank you.
See
All
you next
right.
time. Okay.
Next time.
Yep. Bye-bye.
Bye bye.